Halo, cześć wam, witajcie, Tomasz z tej strony, witam was na kanale Koszary Tradingu. Ten materiał będzie trochę inny niż pozostałe, ponieważ dzisiaj mamy rozmowę z co-founderem protokołu Alvara. Jest to projekt, który wywodzi się z branży takiej tokenizacji, więc podchodzi tutaj pod RWA. Mają oni bardzo ciekawy model generalnie biznesowy oraz pomysł na rozwój tego projektu. I dzisiaj porozmawiamy sobie na ten temat z co-founderem tego projektu, czyli Dominikiem Ryderem, który opowie nam co nieco więcej właśnie odnośnie tego projektu, jakie mają oni wizje, cele oraz tak właściwie czym ten protokół w ogóle jest. Tak więc nie przedłużając, przejdźmy sobie już do samej rozmowy. Hello everyone, my name is Tomasz and welcome to my channel again. Today's episode is pretty different than usual because we've got a very special guest and it's Dominic Ryder. Hello Dominic.
Hello, thank you very much. Thanks for having me.
Yeah, it's great to have you here. So basically, Dominic is a businessman and also co-founder of Alvara protocol. And this is our main topic for today's episode. Before we get started, Dominic, could you say something more about yourself to our audience? You know, your crypto background, business background, experience and stuff like that.
Yeah, absolutely. So, Alvara is DeFi and my background is in traditional finance. So before crypto, I was a stockbroker and derivatives trader. I then joined St James's Place Wealth Management, which is a FTSE 100 wealth manager here in the UK as associate partner. And then after that, I moved to traditional venture capital. I set up my first sort of crypto and blockchain related business back in June of 2021 and then launched the first token. That was sort of in the gaming and metaverse world, so very different to the DeFi world that Alvara is in. That was in August of 2021. But the first thing that got me into crypto was knowing one of the founders of Curve Finance, which is like obviously like as DeFi can get in terms of its like infrastructure. And so even though the first sort of protocol I focused on was in the gaming side, I've always been sort of DeFi centric in terms of my own investing and obviously the decentralized finance and traditional finance opposites in some ways, but obviously the concepts are exactly the same. It's just improving on a centralized way of doing things and making it and innovating to completely decentralize it. And so that's what Alvara is looking to do, is to sort of decentralize the asset management industry and allow it to be a meritocracy. So a meritocracy is a complicated word, but it essentially means that in a meritocracy and a meritocratic society, you should be able to rise to the top if you have the most talent. So no like class issues, no race issues, just in an equal society, meritocracy means that talented people do the best. So what every society should be, but obviously there's a lot of like, blood is thicker than water, and a lot of like education even segments people from, I couldn't get a job at JP Morgan or Goldman Sachs because I went straight into derivatives trading after the equivalent of college. And so even though I had 10 years of experience on the people applying to these investment banks, that didn't matter because when I applied and filled in the form, there was a box of what degree do you have? And if you put no degree, then you got filtered out regardless of 10 years experience in, partner level roles. So we're trying to solve that issue and build a better way.
Okay, cool. So I can see you've got pretty solid experience in financial industry in general, so that's great. And so we can start with our main topic for today. And my next question is, what is it, Alvara protocol, and what problems that you're trying to solve, and basically everything that our audience should know.
Yeah, well, I'll share my screen and run you through all of the different. There's a lot to it, but the overall concept is one that's once people get it, they tend to be as bullish as I am. Obviously, I am a bit biased, but essentially we have two parts to this. So number one is a token standard. So just like the ERC20 is a token standard, the 721 is a token standard. Recently, there's been this ERC 404, which isn't actually a token standard. They just took the number randomly. So that's why we didn't use a number ourselves, because until we get an official number, we're calling it the BTS, which is the basket token standard. So we have submitted and we should hopefully have that number through soon, but still waiting on that. So as a token standard, it's completely open source. Anybody can code it and we will recognize anybody's coded token standard. But what we do to facilitate its mass adoption and to build our infrastructure is to essentially allow for anybody to mint one just by filling in some basic details on the front end, and they can mint a basket of tokens to their wallet, and other people can contribute and they can essentially manage that on the platform. So I'll do a quick one here. Let's do it for, I was my long position in prom this morning.
Oh.
I'll put that.
That's nice.
And we can call this, let's call this Polish demo, and we'll call it PD. So we've solved the scalability problem that a lot of our competitors have had, because, you know, we're not the first to try and innovate in this space with like decentralized baskets, decentralized ETFs, or decentralized management. But the problem that they all have is that they try and control decentralization rather than manage it. And what I mean by that is that if you don't have stuff like transferable LP tokens, if you whitelist who can or can't manage one of these, then you're essentially doing the job of the regulator, which is to basically decide who can manage a fund or not. And so that's a bit of a target on your back. So they're doing this for the right reasons. They want, you know, to whitelist managers so that they don't have bad actors. But decentralization comes at a cost. And one of those costs is that bad actors can try and use something for, you know, nefarious or bad deeds. Our job as the platform is to do exactly what like Pancake Swap does. If you go to buy a honeypot, they will tell you, this looks like a honeypot. Are you sure you want to continue? If you click, yes, I want to continue, and you buy it and it is a honeypot, you know, they've told you that it looks like one. And so we are the same. We're giving a trust score like Dex Tools does. But if people want to, you know, not listen to our big red warning saying this manager has full discretionary permissions and they have not KYC'd, you know, we've got to give a certain level of responsibility to users. And because of that, it solves this scalability issue, because if you only allow for governance and DAO-based managers where every decision is put to the holders, then inevitably you can't scale, because 99.99% of the asset management industry does not ask permission before they buy or sell stocks. They just release a report at the end of a quarter or the end of a month, and they tell people the top holdings, and people have that element of trust for the manager. So we solve a lot of the trust issues with the blockchain, but we are allowing full discretionary permissions, because that is what is needed to actually bring institutional adoption to the platform and to our token standard. So if we make this one a quick metaverse BTS, any ERC20 token can be added into a BTS, and an infinite number of them. There's no fee at first for minting a BTS, obviously gas, but there's no fee going to Alvara, because we want to populate the platform with as many BTSs as possible. However, we do have the one sort of stipulation slash, you know, clause, if you like, which is a minimum of 5% of any factory minted BTS will be in the Alva token. So, like I mentioned, the code is open source for the BTS. Anybody can code one. And if they code it themselves, you don't need to have Alva in it, because obviously it wouldn't be a token standard if we forced everyone to put our token, because that's centralized. So it's only factory minted ones where people have to have a minimum of 5% in Alva. So if I go 30, 30, and 30, allocate one here, you can see the minting fee is free at present, just gas fees. Let's see if Golly ETH is on my side today. I'll go aggressive gas just in case. Let's see how long this takes. But yeah, as soon as this is loaded through, it should appear onto our leaderboard. So we're going to try and we have sort of gamified this and given that natural competitive instinct to users, in the fact that people will be able to come onto the platform. They will be able to see exactly who else has created what. They will be able to scroll through and they can click and contribute to anybody else's basket. Mm-hmm. So Gorley is still pending at the moment, but hopefully that goes through soon. If not, I can always bring one up from earlier, but go on.
So basically, if I understand correctly, that everyone can create their own basket of assets and just share it to others, right?
Yeah, absolutely. So you can see here, just after the transaction indexes, there we go, that we've got the swap of Alvara, Mana, Sand, and Axie. You can see that the BTS itself has been minted to my wallet, and that resides and lives in my wallet as the owner. Right. So the important part in terms of access is that as the owner, I can't access everybody else's Ethereum within that BTS. I can submit changes on an interface, but I can't actually pull the Ethereum out. In order to pull the Ethereum out, you have to have the corresponding LP tokens. And so we can see here that we've got the BTS on our leaderboard. We have the trending. Everybody loves a good trending, and all of the individual categories and TVLs and everything. And so this is what really makes Alvara this core DeFi infrastructure, is the fact that whenever anybody contributes to anybody else's basket, in return, they receive completely unique transferable ERC20 LP tokens. So what that means is that as a BTS manager, you know exactly who every single one of your holders is, because they all own the same unique LP token. So with that, you can build your own governance if you want. You can build staking pools. You can build lending strategies. You can add liquidity. You can add derivatives. You can build absolutely anything that can be built on a normal ERC20 token with your BTS's unique LP token. And so just like how with Curve Finance, you have Convex, a top 100 token built on top of it that couldn't exist without it. You have Yearn, StakeDAO, Pickle Finance, Beefy Finance, and all of these other tens of yield aggregators that are all built on top of Curve's core DeFi infrastructure. We have the same exact scalability, but rather than having tens of yield aggregators, we have the ability for hundreds, thousands, or tens of thousands of individual sub-DAOs and sub-protocols built on top of Alvara's infrastructure. Because as you can see here, the PD LP token is given in return to any Ethereum that is contributed. And so people can mint like BTSs and just have them performing and see how they do. And if they do build up AUM, then great. Or people can approach this like an actual business. They can set up a website. They can tell people why you should contribute to their BTS. Everything links through to Alvara, where people contribute, as we are the on and off ramp for this whole new asset class in this whole new industry subcategory. And so when people are building AUM, they're earning fees on that, like an annual management charge. And so they have every incentive to build out on top of their BTS, because if you were to submit KYC, that will make people trust you more. You don't have to, like I said, we're completely decentralized, but if you want the best trust score, you can submit KYC if you want. You can link a website, you can link a Twitter account. And so we're allowing for the full business life cycle where somebody can come onto the platform, they can mint a fund, they can manage a fund. And then once they are done, if they have a popular fund that they've been, let's say that they've built a tracker that's tracking the top liquid investments from Animoca in 2021, and they've built up 1,000 ETH into that BTS index tracker, they can sell the rights to that management fee on our marketplace. And essentially people can purchase that as a revenue stream. And so this has the full business life cycle where you actually have some sort of exit strategy as well if you are a manager. And so this does have the ability, as Alvara being this very, very bottom layer of infrastructure, for infinite scalability. Or it's not like a game or metaverse where you're hoping for a few billion maybe a 10 billion market cap, and then like, you know, there isn't much really that you can do above that unless it's like crazy hype and FOMO. But we have the limitations of the asset management industry, which is ever expanding, ever growing. And so the scale that this could go to, obviously we got a lot to do between where we are now and where we want to be. But the scale we could take this to in terms of like our end goals and our potential is huge. And we're trying to make this not just what you're seeing here is very much the consumer side and the retail side. But what we've done to make this truly institutional is that we've also taken the exact same gauge weight voting style as Curve Finance. So I'm not sure if you're familiar with Curve Finance in particular, or the DAO and the way that they do that. I'll try and find the site so that I can give a comparison of what the differences is. But essentially, how Curve's gauge weight voting works is that they use this gauge weight system where the more Alvara you, the more Curve you purchase in this case, but with us, the more Alvara you purchase and the longer you stake it for, the more voting power you get. And with that voting power, you vote to send rewards to your BTS's LP token holders. So what that means is that you as a BTS manager, or you as an institution, you may not be able to get to the top of the leaderboard if you don't have the performance. And let's face it, a traditional institution, they won't be trying to get a 10,000% return in their first year, because they are, you know, trying to also manage risk, which there'll be a lot of degenerates who are using this who just ape into like tiny little low caps because they want to try and get onto the top of the leaderboard. But if you are sitting there as a multi-coin or a Pantera and you're sitting on page 4, you're sitting on page 5, and so you want to bring more attention to your BTS and get more contributors, because obviously the more AUM, the more money and fees you earn, then you can purchase as much Alvara as your capital allows, stake it for as long as possible. So Curve, the maximum is 4 years and the average lock time is 3.3 years. And so that causes a supply shock. And with the voting power, you vote and you send rewards to your LP token holders, which means that the more Alva you own, the more Alva you can stake, the more Alva you've got staked, the more rewards you can send. And your contributors aren't just earning any potential upside, they are also earning a yield just for sitting in your BTS. So that incentivizes more and more contributors, because obviously they're not just earning upside, they also get a yield just for parking their money with you. You as the manager earn more fees. The more fees you earn, the more Alva you can buy, the more you can stake, the more rewards. And it's a self-perpetuating loop of accumulation for the most successful managers and institutions. And you had this with Curve. You had what was called the Curve Wars. If you Google it, it will come up. Type in Curve Wars DeFi, and this was Convex, Yearn, and all of these other tens of aggregators fighting for as much VE Curve as they could possibly get, because of how desirable it was to incentivize their LP tokens. And so it's a similar gauge way governance structure, as you can see. Let me share here on Curve. And so with the VE Alva, you will be voting for your BTS. So rather than these LP tokens, LP pools on Curve that you see, because Curve is a DEX essentially, and ours is obviously very different, but the gauge weight voting, where you send a percentage of rewards to the BTS depending on the voting power and how many people are voting, is the same. And so that competition only incentivizes these whales and institutions to try accumulate as much as possible. And that doesn't even take into account the fact that we have this 5% every time a factory minted BTS is created. We have 5% every time somebody contributes to a factory minted BTS. And so all of that is small buys, but every contribution to any factory minted one ever will be 5% in Alvara. Couple that with the gauge weight style governance, where whales are accumulating to vote and incentivize and earn more fees, plus all of our revenue options, all of it is in Ethereum. It's not accepting our own token. the utility of our token is the gauge weight governance, which has managed to get over 70% of the supply of Curve staked on its platform. And so that sort of supply pressure and locking it away for an average of 3 years or more is an effective, a burn for that period of time. And so the incentives and the utility and the fact that all of our revenue, the 0.5% in, 0.5% out to every contribution, that is ETH revenue, all of the monetization features of CoinMarketCap, CoinGecko or DEX tools, all Ethereum or stablecoin revenue, and all of the secondary marketplace fees from selling the underlying revenue stream of your BTS. And all of that is buy pressure. And none of that is accepting the token, which obviously as a business, the problem with accepting token is that inevitably, in order to sustain the business, you need to sell that token at some point. And so our stakers get Ethereum platform share, as well as not having to worry about, paying for things in the token. Of course, there will be sell pressure from incentivizing the BTSs, but that's counteracted by the fact that the people who are voting have had to purchase Alva in the first place and stake it for up to 4 years. It can be less, people can stake it for less time, but they don't get as mumuch voting power. Yeah, the heights that we could take this and the potential, like if we hit all the right notes, is astronomical. A lot from here to there, but we want to obviously, get this to its full potential, and I'm confident we can get there.
Okay, that's very interesting. So my question is, when it goes to the utility of the token, if I understand correctly, first of all, it's a governance token. And secondly, and what's most important, it gives me a power as, let's say I'm an asset manager and I have my BTS and I want to go up on the leaderboard. I want to create more revenue to my holders, my community. I can buy Alvara token, stake it as long as I can, and then I have a power for go up to the leaderboard and stuff like that, right?
Yeah, absolutely. So it's one of these where it's not just because people always wonder and always think it always seems a governance token is always a bit of like when people say the utility is governance, they think of Uniswap. Our governance is different and is much more bullish due to the fact that it's actually the voting power has a direct correlation to incentivizing what the institutions and users and fund managers are all trying to do. And so our governance is a governance that's tried and proven, rather than just being one that's a rude word governance token which has got bull in it. Ours actually has a really strong use case beyond just, voting for whether something should pass or not pass or putting an opinion forward. I'm trying to load up in the background the exact stats to show you sort of how bullish it's been for Curve Finance in terms of supply pressure and everything. So as well as the governance side, you've got the 5% buy pressure. Every factory minted BTS, 5% buy pressure. And this is always a minimum of 5%. People can have more than that. 5% every time anyone contributes. You've got the buyback and burns from the fees. You've got fee share. And you have also essentially the token is used throughout every single element of the platform. And yet we managed to make solid Ethereum revenue, so that we don't have to sort of sell our token for it. So strong use case, and also not much sell pressure.
Yeah, it was a good point with this governance token, because the most of the people when hear governance token, they think there's no utility in that. But right here I can see a lot of it, especially when it comes to this BTS power and creating real revenue for your holders and yourself. So that's great. My next question about Airdrop, because when I was on your website, I saw that you plan to do so. So how it works, how people can evolve into that?
Yeah, so there's we've structured it in a way to be, because we don't want to just be an airdrop where people farm it and cyber it. We want it to really go to those who are adding value. And so there's a few very low level tasks which get you like, I think it's an average of like $2 a task, which is purely the socials and like interaction there. Where we are incentivizing the most is people who use the platform. And so there's some huge like airdrop potentials for people who actually mint BTS, because our key drive is to facilitate the mass adoption of our token standard. Because if we can get the ERC BTS to the same level as like the ERC 721, which is the NFT, you know, by default, even though there's, you know, ERC 1155 and 721, just ERC 721 is synonymous as the NFT. People don't even think about it. If they're going to mint an NFT collection, they don't need to make a decision. They just think, okay, I'll mint a 721 or a collection of 721s. And so if we can get that same level of adoption for the BTS before traditional finance comes on chain, because, you know, even Larry Fink, CEO of BlackRock, says tokenization of assets is the future. And so if we can get that go-to token standard before they come flooding in, and they see that everyone in crypto is aggregating against a certain standard, if they don't use it, then people are going to look at them like, well, why aren't you? Can you imagine if like, if a traditional brand came into sort of the NFT world, which they have done before, and decided to not use the 721 and just use something completely random that doesn't pull through to OpenSea? People would be like, why have you done that? It's like completely ruined your like market. Like, where do I buy this? And that's the level of adoption that we want for the BTS, because it forces the hand of the institutions. If we get the adoption where everyone is aggregating against this one standard, then there's no reason why they wouldn't use it, because it's more difficult for them not to than it is for them to actually do it, and less secure, because a token standard by definition is there to give people that safety. Because if you stick to a token standard, you have the safety of that token standard. It's only when you start messing around with code that you can open it up to exploits. Like once it's a accepted token standard, obviously like the actual Ethereum Foundation checks that it isn't exploitable. Obviously it's audited anyway. But that's just an extra level of security. Then, you know, that could be huge, because everyone would be using BTS, like BlackRock. Yeah. So that's like very, very end game, and like top level where we want to take it. But there's no reason why it can't be, because we've got rid of people's objections. So one of the main reasons people gave for like not using like these other competitors is that they didn't have, firstly, they didn't have discretionary permissions, which meant that everyone had to ask permission, which by itself, like, they're doing it for the right reason, but in reality, like, they're just completely alienating the whole traditional market. We've solved that by taking this sort of Uniswap Labs, Uniswap model. On top of that, we have an emergency stables button for those people who do choose governance, because there are scenarios where, like, the Luna and UST incident, you know, you don't want to say, guys, I think that UST is going to depeg. Can I stable in 3 days' time? Because it's like, you know, by that point, there's no use. And so the only loss of an emergency stables option is if they call it wrong and the market continues going up, there's a bit of opportunity loss, which I think most people will be willing to stomach for, you know, because there isn't a downside. It just may not give you exposure to some potential upside. And so the objections that we're now getting are actually quite bullish ones. A market maker we were speaking to mentioned, and this is a really good problem to have, is their concern was whether DEX liquidity could keep pace with our ambitions, which is true to a sense that, you know, right now, if BlackRock wanted to come across into the on-chain space, like, they couldn't use DEX. They probably couldn't even use, you know, centralized exchanges, because their size is just so large. Like, Bitcoin's worth $1 trillion and BlackRock has like 9 trillion under management. So it doesn't equate. There's just not enough liquidity. They would just, you know, completely obliterate the market with every purchase or sell. And so with DEX liquidity, obviously, that's a similar scenario. If we want to attract these billion-dollar asset managers, they need the liquidity, because, you know, working and coming from a traditional finance space, like, you have arguments and you have like debates and you change providers based on like 1 basis point, like 0.01%, because where you have like these big size that like every little bit matters. And so it's a bullish objection to get, like the whole DEX industry not keeping pace with our ambitions. But it's meant that we've started conversations with people like Coinbase Custody, Fireblocks, FalconX, some of these bigger sort of centralized or like aggregators / like, you know, wallet providers. Because our ambitions are that we want people to not have any objection, because any objection that they do have is a reason for them to not use us and to, like, you know, do it on an exchange. And so if we're able to tokenize like centralized exchange liquidity, obviously we'd give people the option, like there'd be a toggle button, like so that people know whether they're going fully decentralized or you know, have centralized. But we want people to have that option because, once you start getting large amounts of capital in TVL, every little bit matters. And so we, as the foundation, our goal is going to be trying to make sure that we have the option for institutions, and the platform is built to facilitate the same sort of like, thought process that is in these centralized fund managers and traditional fund managers' minds, which is looking for like best execution. Like best execution is a really important part of traditional finance, and it's very liquidity based. So that's sort of so it's a bullish objection that we're now trying to like focus on those sort of things because we think we've solved the rest. Fingers crossed.
Yeah, I totally agree that tokenization is a huge market and it's going to be huge in the future. Like as a company, like BlackRock get into it. So I think protocols like Alvara and the other one are huge potential for the next years when this trend will grow up. So my last question is about the token and launch of token, because I know your launch is going to be on the Tencent protocol, and if someone from our audience is interested in that, we like to get into the protocol, do some actions for Airdrop and stuff like that. How can they participate, and where should they look for the information about that?
Yeah, so I believe that the Airdrop campaign is on Zili, but it's pinned on, just because you know what it's like with scam Airdrop channels. So don't trust anyone sending you a DMs, because we won't be DMing any Airdrops out. But if you go onto our official Twitter, which you can find the links to on our website or on Tencent, then there is pinned the official Zili campaign. As well as that, obviously we have our Telegram and all other normal social channels. But if you go onto alvaraprotocol.io, follow all the links on there, and it'll be Safu. And I think it's 10 days time, the IDO, or it might be 9 days time, the IDO on Tencent, and then we go live on the 5th of March, as in actual ad liquidity TGE, 5th of March, but the Tencent raise is about 10 days prior to that, around 24th, 25th.
Okay, of course, I will put all official links into description, so just following it. Yeah, and I think we, cover all key topics about the project. Maybe do you have any, finishing ideas that you like to put?
Yeah, I'd say, every time I have any sort of AMA or conversation on this, I always think of something sort of new because of how far the web goes and how the token standard is so adaptable, because, by definition, it has multiple use cases. Everything that we've covered today, this is just like the liquid ERC20 trading crypto element. The BTS itself can be used as like a multi-SPAC model where you can raise funds, and as long as it can be tokenized, it can go in. So you can have, a private investment fund that raises money into a BTS and then allocates that to tokenized, private equity investments. You can have land, property, agriculture, commodities, anything, all inside of a BTS. And so the web and like how far this goes and like the adaptability is, almost unparalleled in the current market. And so, obviously, like I mentioned, we have a lot to do in terms of getting from where our ambitions are to where we are now. But, if you're looking for something that has the ability to like change the space, doesn't mean that, hopefully we do, and we have all the potential to, then sort of Alvara is that, because our ambitions are, you know, huge. We want this to be, and we don't see any reason why we can't get ourselves to be the top ERC20 token in the market because of our use cases, because of our composability, adaptability, and the fact that we are this bottom layer of infrastructure with the potential of tens of thousands of others built on top of us. You know, we really think that we're onto something with this. So hopefully you agree. And yeah, thanks for giving me a chance to chat through it with everyone.
Yeah, it was great summarize, and I hope, you know, all of these ideas will succeed, and I hope to see you soon. I don't know, maybe in a few months, and just see the results of this when the market will be in the better condition. It was great to have you here, Dominik. Thanks a lot, and I wish you all the best, and I don't know, see you soon.
Thanks so much.
Bye, bye. Okej, słuchajcie, to by było na tyle. Mam nadzieję, że Wam się rozmowa podobała, że dała Wam informacje potrzebne do tego, aby podjąć decyzję odnośnie tego, czy chcecie w tym projekcie działać, czy też nie. Wszystkie potrzebne linki macie w opisie, także nie klikajcie niczego gdzieś tam z Twittera, bo tak jak mówił Dominik, mogą to być po prostu skamy. Dajcie znać, czy tego typu materiały Wam się podobają, czy chcecie więcej tego typu rozmów z różnymi osobami z branży. Nie tyle odnośnie samych projektów, powiedzmy, tylko w ogóle na temat na przykład sytuacji rynkowej z osobami, które siedzą na rynku już po prostu długi czas i mają jakby coś konkretnego do powiedzenia. Czy tego typu treści w ogóle Was interesują? Dajcie znać, jeżeli tak, to będę robić ich tutaj oczywiście więcej. A za dzisiaj Wam już dziękuję i widzimy się w kolejnych materiałach. Trzymajcie się, cześć!